Hello, and welcome to another update video about Ethereum. Yeah, painful price action to watch, but really not much happened. Yesterday we had a bit of a rally, but the price got rejected exactly in resistance. Could not sustain above the 61.8 retracement level here. And this still keeps the previously presented microstructure alive. In the yellow count, we have here the possibility for a larger B wave, as you know if you watched the last video. So in this case, we could still work on the B wave of the larger B wave. And in the white count, we might have started wave C to the downside. So let's talk about these two options. Let's talk about the short-term bullish and short-term bearish scenarios. First of all, the overall context suggests that Ethereum is in a wave 4 correction. That shouldn't be a surprise. We've been talking about nothing else in the recent weeks. So this wave 4 is clearly still in control. And yeah, I mean, in theory, or in reality, this structure can take many different shapes and forms. It's normal in corrections. But I try to boil it down to the most probable ones. But we need to be still very flexible within corrections. Especially the ETH chart I find very challenging at the moment, and it might be worth waiting for a little bit of clarity before really, making any aggressive buys, for example. The Bitcoin chart is a bit clearer. Ether's chart has a problem because there is a real risk that Ether will break below the $2,975 level, which is the 50% retracement, and if that happens, again, it's not a disaster, but it would lead to a reinterpretation of the daily chart, which is never great, so the larger time frame. It wouldn't make Ether bearish, but it would change just the overall assumption on the daily chart. First of all, we haven't broken that level, however, and it's clearly visible how Ether is respecting the support area still, but it can't really generate that buying pressure that's needed to confirm that the correction is over at this stage. So at this stage, we have that short-term bearish and short-term bullish scenario on the chart within the wave 4. And in the short-term bearish count, that is here a WXY structure. Presented that one to you yesterday. Wave W bottomed around the 20th of March. The X wave peaked around the 26th. And the Y wave could be unfolding right now. The Y wave is an ABC structure. The A wave might have bottomed already. Maybe it's getting one more low. Then we could get a B wave and a C wave. So basically, to keep it very simple, in this structure, we expect further downside, and it shows us what would likely happen if the price can't hold the critical $2,975 level. So in the white count, it remains only valid as long as the price stays below the X wave high. That's at $3,685. But then, this could also still morph. I mean, it's possible that in the Y wave, wave A bottomed, wave B topped, but it would be a very, very weak B wave. And then the C wave down could be unfolding right now. To make that more likely, I need to see first a break below $3,199 basically here, the yesterday's low, or it's actually the Wednesday low. Would then need to see a break below $2,975 as well. So if that is unfolding, then we likely heading into this white target range between $2,740 and $2,300. In this scenario, it's even possible that the B wave is extending a bit. So don't be surprised if we get a wider B wave flat. That will become less likely with a break below that Wednesday low. This is the short-term bearish count. Even in that short-term bearish count, the B wave could at present still extend a little bit higher. In a short-term bullish scenario, we have a more extended B wave rally actually. So basically the top that formed here around the 26th of March actually is still here unfolding right now. So that wave is still unfolding. And the idea would be in this scenario that we are now in a larger A, B, C structure of a larger B wave, and we would then still need one more low to complete the correction later. But the advantage of this wave count is in yellow, and I would like to see it. I don't necessarily see it as much more probable, but I'd really like to see it because it would put Ether's chart into a much more healthy position. If Ether could rally and put a high B wave in place, maybe around $3,900, it would put the Ether chart into a healthy position because it could then most likely, in the C wave down, which would follow, hold a higher low and hold actually the 50% fib level, at 2,975. If we obviously don't get that high B wave, the risk is very high that we break below orange support, which again is not a disaster, but it would change the overall assumption on the chart. So for the most straightforward pathway, it would be ideal if the price could just rally in a high B wave. Now, how can it do that? The yellow count should also be known. We talked about it yesterday. A, B, C to the downside currently to form wave B of B. It could get one more low, maybe to run about 3,110. And then, basically from this region, if I see a first 1-2 setup to the upside, it could indicate the start of the C wave rally. But overall, in both scenarios, I have no evidence that the wave 4 correction is over. But in both scenarios, I would expect a continuation of the bull run after the correction is completed. However, on the Ether chart, it's not as straightforward as on the Bitcoin chart because I would have to change the wave structure on the daily chart if we get a sustained break below 2,975. And Ether is definitely showing not the strength it would ideally need to show at this point. That's my update about Ether. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.